Friday, August 20th, 2021, Maneco 64, home of alternative economics and contrarian views. So we're going to look today at whether the United States Treasury owes Brazil over 1,200 tons of gold at $35 an ounce. Yes, $35 an ounce. And how did I come to this question? And this could apply, of course, to every other country that had dollar reserves with the United States prior to August 15th, 1971. The reason why I'm looking at Brazil is because that's where I was born, that's where I grew up, and that's where I was in 1971. And I was reading a great article about what happened on that fateful day by Ronan Manley of BullionStar.com. I'm going to put that article below in the description. It's called British Requests for $3 billion US Treasury Gold, the trigger that closed the gold window. He has loads of information, loads of references, but what interested me was what he said at the end of his article, and I quote, "One final point to note is that while the temporary suspension of the U.S. Treasury gold window has been ongoing for 50 years now and is a source of ridicule for the U.S. government due to the wording temporary, the last laugh is on the foreign central banks, since under international law, all of their billions of U.S. dollar holdings prior to the 15th of August 1971 gold window closure are still valid and legal claims against U.S. Treasury gold holdings." Think about that for a moment. So when you think about that as well, you probably realize that there is no gold in Fort Knox, or there won't be any gold there anytime soon. And the other reason why I thought about Brazil and I wanted to look at Brazil, besides being originally from Brazil and being born there, is that Ronan Manley wrote a really good article as well on August 3rd. It says, Brazil's central bank refuses to answer any questions about its gold reserves. So why was Ronan Manley trying to contact the Central Bank of Brazil about its gold reserves? Well, because Brazil has been buying a lot of gold in the last few months. I think from May to July, it doubled its gold reserves. And Ronan Manley wanted to find out a bit more about this, where they're holding the gold, and so on and so forth. And the Brazilian Central Bank just said, replied to his request and said, the data is public, but they didn't go into details. When I read this article about August 15th, I didn't think too much about it in terms of Brazil, but then yesterday when I looked again at that last note that Ronan Manley made about international law and the fact that the United States Treasury still owes the countries that had reserves with them back in August 1971, they still owe them that gold at $35 an ounce. And if you know something about Richard Nixon, is that he was a lawyer. So the U.S. defaulted on those gold obligations, but it was temporary. So those obligations still exist, as Ronan Manley said, under international law. So that was kind of a bit of a eureka moment. I thought it's weird that we're coming up to the anniversary now. We're coming up to the end of the U.S. fiscal year, which is end of September, and we're seeing Brazil accumulate all this gold. Could it be that Brazil is just taking back its gold? And could it be the reason why they're not being so transparent with Ronan Manley? So I did a little bit of research, and I found that back in August of 1971, Brazil had $1.454 billion of reserves, the Central Bank of Brazil. I got this data from Trading Economics. They got it from the Central Bank of Brazil. And of course, at that time, gold was fixed at $35 an ounce. And reading the article that he wrote on August 17th. Yes, the British, the French, the Germans, the major countries, they knew what was coming, so they were able to go to the U.S. Treasury and demand redemption. They knew the Americans were going to close the gold window. The ambassador to the U.S. of the U.K. was a banker from the Baring family. He was a governor of the Bank of England in the 60s. So he was very well connected. So these countries got away with some of their gold before Nixon closed the gold window. They got away with it at $35 an ounce. Yes, it looks like the UK only took $750 million instead of the $3 billion, because $3 billion would have taken about 25% of the US's gold reserve. But Brazil had half of that $3 billion, or just under $1.5 billion. That would have taken an eighth of US gold reserves as well. And this is just speculation. I don't think the Brazilian Central Bank, whoever was running that at the time, or the Brazilian Treasury, were aware that this was going to happen. Thinking about what he said about international law, that the U.S. Treasury is still liable to those obligations 50 years later, and that they suspended that obligation temporarily. They didn't say, oh, this is it, we're never going to pay you back again. Because basically that's what it is, paying people back. I did some calculations, and it's very easy. So $1.454 billion at $35 an ounce, that corresponds to 41,542,857.1 troy ounces. And that's 1,292 metric tons. And lo and behold, if you look at Brazil's gold holdings now, as of July 2021, it's exactly a tenth of those reserves they had in 1971. It's 129.7. Yes, it's a little more than a tenth, but it seems like, to me, the reason why the Brazilian Central Bank is being coy, doesn't want to be transparent, is that maybe Brazil is claiming back what it's owed 50 years later. Does that mean that Brazil is going to take the rest of their 1,162.3 metric tons? Because that's the difference between 1,292 and the 129.7 that they have now. Maybe. And if you were to look at other countries back in August of 1971, just before the gold window was closed, they must have claims to thousands and thousands of metric tons. That would clean out the United States Treasury gold. That would clean out Fort Knox, West Point. Not that it might not already be cleaned out. So any gold that the U.S. can get, like in Afghanistan, we know that I think they had 22 tons there with the New York Fed. Ronan Manley just wrote another article I saw pop up this morning. Apparently that Afghan gold has been at the New York Fed since 1939. So is that going to go to Brazil? Is that going to go to another country? It bears watching. I think Brazil, you can expect them to keep buying gold in the next few months or next year. And I don't really think they're buying gold. They're just converting back the gold that they were owed. And I also saw an article yesterday that Brazil now has a record amount of gold reserves, but it doesn't. Maybe in confetti dollars it does, but in real gold it doesn't. It's like a tenth of what it used to be in 1971. So actually, looking back, Brazil was a very wealthy country back then in terms of gold, and now it's really poor. Is it any wonder that we've had the inflation, the wealth inequality, and all the bad things that happen under a fiat currency system in Brazil? No, it's not surprising. And growing up in Brazil, And being about 7 or 8 at the time, or 10, 11, you notice that things are getting worse. You notice the poverty and the mayhem and the inflation. And I did. And I think it's got everything to do with what happened on August 15th, 1971. And it's unfortunate. It's unfortunate. And I'm not having a go at the United States, at Americans. I'm having a go at the people who run the show, of course, which is the bankers, really. So before we look at the markets this morning, just wanted to go through a few things. First one is an article I saw last night in the FT. It says, chip shortage deepens supply problems at global car makers. It says Toyota to cut production by 40% in September after COVID hits countries critical to assembly lines. The chip shortage hobbling the auto industry has worsened as a wave of coronavirus cases spreads across Southeast Asia, with 3 of the world's largest car makers announcing new disruptions on their assembly lines. Toyota, the world's largest car maker, said it would slash its global production by 40% in September. US-based Ford said one of its plants would halt assembly of its F-150 pickup truck for a week starting on Monday. General Motors added or extended downtime at production lines around North America. So this is the reason why they're doing this. Places like Vietnam, Malaysia, and Thailand, they produce a lot of the electronics, semiconductors for the cars, and they're getting a lot of these cases. So it's disrupting the whole supply chain. So you kind of wonder if this might not indirectly affect used car prices. And I think it could, because if there's a shortage of new cars, you go for the used cars, right? So I think the narrative recently that we've seen, that the rise in used car prices has topped and it's going to come back down, might be a little bit premature, so we need to keep an eye on that. The other thing I wanted to talk about is a Barron's interview done by Market Watch with St. Louis Fed President James Bullard. I have to thank Rafi Faber for this. He wrote about this in his latest newsletter. I mean, most of you, I think, understand now what's going on in terms of monetary policy, what the central banks are doing, what inflation really is. You will be shocked by not only what James Bullard says, but the way he says it. I highly recommend you listen to this. It's about 30 minutes, but he makes fun of the fact that inflation could be even higher next year. I mean, the guy is either a sociopath or a psychopath, or he's really stupid. But what it shows is that these Federal Reserve presidents, he's also a CEO, and he's been there since 2008, so he doesn't even work for the government. He works for a private bank. They are deluded. They live in a different world, and they don't care to be disparaging to the general population, because the people it's going to hurt is the general public, and he actually admits that. I mean, the guy is such a joke. It's going to make you really understand what these Fed bankers are all about. So with that, let's look at where the markets are this morning. It's just before 9 a.m. London. We've got spot gold at $17.86. It's up about $6. Range has been $17.88 to $17.79. So what about silver? Well, silver is still under pressure. Yes, we're way above that Monday flash crash low, which on my system was around 22. We're at 23.20, down about 3 cents. Range has been 23.35 to 23.14. The mining shares as well are very oversold relative to bullion, to gold especially. And I've noticed that my portfolio of mining stocks is not doing well. I don't trade that, of course, so I'm not concerned. Some people are worried that this could mean that bullion is going to collapse because of this discrepancy. But I'm not too sure because gold is looking very firm. It could be the other way. It could be that the mining stocks are going to start rebounding to match the strength of bullion, especially gold. So we're going to have to wait and see. What about the stock market? Well, yesterday when I spoke to you guys, the markets were under pressure, especially after the previous day, having dropped quite a bit. And then they rebounded. They didn't finish really up that much yesterday. I think the Dow was still down on the day yesterday, down 66 points. The NASDAQ managed to eke out a small gain. And this morning, as I speak here, the Dow future is down 170 points or 0.5%. NASDAQ is down a third or about 50 points. And the S&P is down about 21 or 0.5% as well. The FTSE is down 3 points at 70.50. And now to the currencies, and the British pound is taking a beating, and I've been speaking about this for the last 10 days or so about the British pounds, that it looked really bearish, and I was looking at this head and shoulder formation, and yes, it's not looking very good. Why is the pound dropping so much now against the dollar? Well, I think it's because of our economy mainly, but also it could be a little bit political. The fact that the other day, Parliament here in the UK reprimanded and President Biden. And I laughed at that because doesn't Parliament know that the United States has been independent since, well, as per the Treaty of Paris, since 1783. Do you really think the Americans are going to listen to what Parliament says? I don't think so. So maybe the British need to watch out, because the last time they did something that the Americans didn't like during the Suez Crisis, the U.S. Treasury pulled the plug. So this time maybe the Fed will pull that swap line that they have to keep the pound strong. So that's all I'm saying here. It could be political, it could be economic, who knows? But yes, this morning we almost testing 136. We've gotten to a low of 136.08. And a few days ago, we were at 138, so the pound can move very quickly. We could rebound here in the short term, but it's not looking very good. Right now, we're at 136.26, down about 0.1%. The euro is pretty steady. It's up slightly at 116.83. The dollar is down about 0.1% versus the yen at 109.64. And the dollar has strengthened versus the yuan. We are at 650 right now. We saw good gains yesterday. And now to the Aussie dollar. Aussie dollar continue to move lower. It's crazy what's going on in that country and also New Zealand. They're shutting everything down, locking everyone up for a few cases. It's not even people losing their lives because of this. So right now, Aussie dollar at 71.21, down 1/3%. The dollar versus the Canadian dollar is up as well, 0.5%, at almost 129. And let's look at the Kiwi dollar. Kiwi dollar is down 1/10 at 68.21. Let's have a quick look at the chart of the Kiwi dollar. So yeah, the Kiwi dollar as well, looking a lot like the British pound. It's interesting because Canada, Australia, New Zealand, Britain, and the US, they make up the Five Eyes. They are the countries that are supposed to be together fighting whatever around the world. Their intelligence services and military are supposed to cooperate with each other. And right now, with what is going on in Afghanistan, it seems like yeah, there's a loss of confidence within that Five Eye group, and I think maybe the currencies are showing that. Who knows? I'm just speculating here. Of course, I'm not privy to what's going on with the Five Eyes and the officials there. So now to the commodities. We've got WTI crude unchanged at 63.52. Yeah, yesterday was a pretty vicious down day for general commodities. High grade copper is rebounded a little bit, is up about 1% at 407. And to finish off, the 10-year yield is unchanged at 1.23%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.